Okay, so apparently I have a lot to talk about today. So let's talk about the Bitcoin ETF, what it all means, why it's so important, why is the price spiked the last 2 weeks. Geopolitical unrest is certainly an element to that. We have unrest in the Middle East. We have unrest in Central, Eastern Europe, Western Asia, whatever you want to call it. We may have some coming in the Taiwan area. It's getting crazy. So when you have geopolitical unrest, people want to run towards safety. That's why they get out of currencies. That's why they buy gold. That's why they buy silver, precious metals. That's been the flight to safety for a long time. But now there's a flight to quality, and that's why Bitcoin gets involved. So Bitcoin is coming up. But the other things that are causing Bitcoin to spike in the last couple of weeks, XRP winning a judgment in their case against the SEC, and also Grayscale winning a judgment against the SEC, which gets them that much closer to a spot ETF for Bitcoin. Now, a spot ETF for Bitcoin means that the underlying asset, Bitcoin itself, must be purchased by the ETF, which means that it's going to impact the price. It's not a derivative. It's going to, like, they're going to have whatever. If there's a spot ETF and let's say it's a $200 million, okay? I have no idea if that's a good that's a good size for crypto. That would mean $200 million would have to be used to buy Bitcoin, which would have a dramatic impact because I think all of Bitcoin right now, Bitcoin at 30K, 20 million Bitcoin, so that's about 600 billion market cap. So if 200 billion comes in, anyway, it's going to impact the price. And I'll get to that in a moment. But I'll say what happens when 1% comes in. I'll pause that for a minute. But the ETF is big because it allows big money to enter into Bitcoin, and because it's a spot ETF, not a derivative product, you have to buy the underlying asset and hold it, which means all the funds that come in will have to go towards buying Bitcoin, which will drive the price up. So the problem is that there's not much on the market. There's a lot of Bitcoin being held and not available, and because it's not available, the price of Bitcoin depends on the last transaction. So if I go out on Coinbase and buy a Bitcoin for $50,000, even though the price is 30 today, right? You'd be like crazy. But all of a sudden, let's just say I bought one Bitcoin, or I buy a fraction of a Bitcoin at a relative value of $50,000 per Bitcoin. Let's just say I bought $500 worth, but I paid for only 0.01 Bitcoin. So now that's a 500, 5,000, 50,000. Yeah, that would be a 50,000 valuation on it, which is overpaying by almost double. But the rest of, if I had 10 Bitcoin and I bought 0.01 Bitcoin at a $50,000 valuation, all the rest of my Bitcoin at that moment will be valued at $50,000 as well. Problem is that the market would balance back out and the price would go back down. That's the issue. But as the price of Bitcoin goes up on an exchange, all of the underlying assets will go up in relative value. So let's just say that on the market, let's just say Coinbase only has 100 Bitcoin available. So someone comes in, spends $50,000 times 100 Bitcoin, so that's $5 million. So for $5 million, they clean out Coinbase. I have no idea if 100 Bitcoin would do it or not. Let's just say it does. For $5 million, they would wipe out all the supply of Bitcoin, drive the price up, and then whatever else Bitcoin, the Bitcoin would go up in value, and so would everyone else's Bitcoin. So now all the Bitcoin is worth $50,000 a coin, and it'd probably be worth more. This is what real estate developers do, and let me explain that, because we do real estate on this channel too. I get to talk about a lot of different topics on this channel, which is why it's fun. So when a real estate developer, they'll do phases. Let's just say I'm going to build 300 houses. I'm going to build 50 houses and I'm going to sell them, but I might keep a couple, and then I'll build another 50 houses and I'll sell those. So what will happen? Let's just say the first house I sell is $300,000. So now that price and that value in that community, because they're all brand new, they're basically cookie cutter houses except for options or whatnot, and the lot's a little different. Let's just say that they're all worth $300,000. But I own a couple more. Now I list one for $325,000, and I sell that one for $325,000. Now all the prices went up to $325,000, and then I break ground on phase 2 and start building the next $50,000. Now I could say, starting at $350,000. So now I've increased all the value of my lots, all the value of my houses by that much because I sold one house. right? You see how one sale impacts all of it? So if by selling a little bit of Bitcoin or buying a little bit of Bitcoin, I impact the entire market cap. So that's why it's impactful. So by having an ETF, you're creating a vehicle where big money in the stock market and your 401ks and your retirements can come in and buy Bitcoin. And because it's a spot ETF, it's going to increase the price of the underlying asset because they actually have to go and buy it. It's not a contract. It's not a derivative. You can't just do it on paper and then not transact. They have to buy the Bitcoin. So if, let's just say, like there's trillions of dollars sitting on the sideline of these ETFs wanting to come in and getting exposure to Bitcoin. Now they're not going to want to throw all of it at Bitcoin, even though they should. Not financial advice, but historically speaking, that would do well. But they throw money at Bitcoin. Let's just say there's $1 trillion, and they want to throw 5% at Bitcoin. Well, 5% of $1 trillion, well, that'd be $100 billion would be 10%, so $50 billion. Now, Bitcoin at $30,000 roughly today, just round numbers, 20 million, so that's 20 billion times 30, that's $600 billion market cap. It's starting to rain, hopefully it's not too loud. $600 billion market cap, and then all of a sudden $50 more billion comes into it. Let's just see how it's 60. Let's say 10% more comes in. Okay, that's not good. That could double the price because they have to buy they can only buy what's available. And not all the Bitcoin is available. We know how much is in cold storage. We know lots of Bitcoin has been dormant for a year or longer. A lot of people do not leave it on exchanges. The exchanges have been drained and drained and drained. Miners aren't even selling. So getting $60 billion of Bitcoin is not going to be an easy task. Even the over-the-counters would have trouble getting that much. And you're talking about lots of private sales, lots of phone calls, and saying, hey, do you want to sell your Bitcoin? It's not going to be easy, not going to be done like that. It's going to take some time, and I think all the exchanges might just close, and just like they would revalue. And this is where, Bitcoin going to zero. That's what it would. When Bitcoin would go to zero, it's because the exchanges are closed, and because they don't have any more Bitcoin to sell. So at that point, what is the price, and what is the marketplace? So the ETF is creating that new marketplace, creating that vehicle for Schwab and JP Morgan, Morgan Stanley, Chase, Wells Fargo, think T. Rowe Price. Think of all these different investment vehicles. I'm not Fidelity, Vanguard, all these 401ks and retirement plans that have a plethora of funds that would love to get exposure of a couple percent of Bitcoin. I mean, just the average consumer does not have Bitcoin, but they have a 401k, they have a retirement plan, but they can't buy Bitcoin. And if there's a spot ETF that's created and they can buy it, oh boy, watch this thing take off. And that's what we've seen in the last couple of weeks when we had a false rumor of an ETF being approved and Bitcoin spiked from 25 to 30 in a matter of like an hour. And now it's up there in that range again. And the powers that be are going to do whatever they can to hold that price down until the next election, because that's basically the next event horizon. So we got 12 months to go, give or take, and we got a halving coming soon. So it's going to be a wild ride. Not financial advice, but if you're not exposed to Bitcoin now, just as just a what the heck 1% of your net worth, I mean, might want to think about it. If you don't know how, where are the guys to call? Let us know. You can get a collectible, get a ballet wallet, get it funded, do it nice, safe, securely, effectively. Just give us a call. But with that said, I'm going to leave it there for now. I would love to get your thoughts on the ETF and what you think about it. And is it going to be that watershed moment that just opens the floodgates for all this other wealth and currency to just head towards Bitcoin and potentially other cryptocurrencies? So what are your thoughts? I'd love to hear them. Thanks for listening, and I'll see you in the next video.